Happy Monday, everyone. So, on the long drive to my in laws, I was listening on Audible to this book, Advanced Techniques in Day Trading, which is part two of a series by Andrew Aziz. And although I'm really not a momentum trader, I'm more of a long term investor in an options trader slash day trader body because I algo trade. He does have a few tips that are really good, and honestly, I'm guilty of not doing. So one such tip I really thought was really a good idea was like he said something like never let a winning trade turn into a loss. So I thought that was really a good idea because a lot of times, for me at least, this is when I hand trade. When I algo trade, I'm a lot better. But when I hand trade, which I don't do anymore, by the way, it's one of my new rules: never, no more manual trades. But basically, a lot of times you want to take a certain profit up to a cent or whatever, and you actually are up on the trade. You're up the first time, and then somehow you miss the profit by like a tiny, tiny bit. The trade goes against you, and you end up losing, which is crazy. So this is actually a really important thing. So like he suggests a few things like, for example, once you're up on a trade, take some of the profits, take half your position, that sort of thing. But another thing he talks about is moving your stop loss up. So in this video, I'm going to kind of like show you guys how you could possibly move a stop loss up. Let's say you don't even like stop losses like me. How you can like basically like once you're up on a trade, you can create like a stop loss that will ensure you still have some profit, or at least you'll break even. So basically you'll be playing with house money, so to speak. And so I'll show you how to do this in this video. Please like and subscribe if you're new to the channel, especially. I'm going to have a complete 100% for beginners video on Ib-async slash ib-insyc. It'll be super comprehensive. I plan to do it in 2 days. So I hope you guys enjoy this video because this one is very practical. Okay, so let's of course connect to interactive brokers. So from Ib-async import star. So I'll right here connect to IB. Okay. So like, let me give you an illustration of kind of what we want to do. Okay. So let's say Tesla is at, okay, first let's get the market price of Tesla. You know what? So like get Tesla market data. So I'll do Tesla contract equals stock, symbol equals Tesla, exchange equals smart, currency equals USD, and then IB.qualified contracts, Tesla contract. Why do I need this qualified contracts? Because you'll see I'm going to need this con ID for the first thing I want to show you guys. And now let me get the market data. So this is the Tesla contract, and then the market data is, let's say Tesla ticker equals IB.rec market data, Tesla contract, this. I'll explain this in the long video. So now you can just see Tesla ticker. You can see you have a market price. Okay, so let's say Tesla is at 174.65, right? And I'm like, okay, I want to buy this and I want to profit. I want to make, let's say $100 on the trade. I want to buy 100 contracts and sell 100 $1 higher than the current price, right? So I can have like a limit price be like 174.6, for example. I can do take profit equals 175.6. But let's say I don't really want to stop. Like let's say stop loss, I don't want. So I can basically, I don't want to stop loss, but what happens if I buy at 174.6 and the price goes up to 175.2? And then it crashes to 169 or something, right? I actually don't want that situation. I want to protect some of my gains. So I can move the stop loss up, so to speak. So like in another video, I spoke about trailing stop losses and stuff like that. But in this video, I'm going to do something else. I'm going to basically make the stop loss only really active when the trade goes in your favor. enough, you make the stop loss active, and you make the stop loss either at take profit or at the limit price, or you make the stop loss either at break even or slightly above break even. So so I'll do something like stop loss not active unless trade goes in your favor, then move to break even. Something like this. Okay. So let me illustrate how you would do this. So the first method I'm going to illustrate actually does not work. So the reason I want to illustrate this method is to remind you guys it exists. So basically, in another video of mine, I spoke about like you can have price conditions, time conditions. Let's say you only want to buy Tesla if Nvidia is under 160. If Nvidia is like 1,000, but Nvidia is under 960, for example, you buy Tesla. That's a price condition. Or there's a time condition, meaning you only want your order is only in effect from 9 to 9:30, for example. Or there's a margin condition. You only buy if your margin's okay. So I wanted to do it in this way, but then I realized I couldn't. So let me show you the technique and then show you why it doesn't work. So just to remind you guys, like you can set up a bracket order like this. Let's say set up a bracket order. So what we really want is we want a limit price of 0.5. We want, let's say we want our limit price. Let's say we want the current market price. Let's say minus 5 cents, right? So we'll wait until we'll take 5 cents less than the current price, right? That market price. What is the market price? 174.89. Okay, so this would mean like 174.84. Okay, our take profit will want $1 higher than the limit price, and our stop loss we would want 0.5 higher than the limit price. So this completely is stupid if you run it like this, because the stop price will get hit right away, and it'll execute immediately, right? And you'll probably get an error because you can't do a bracket order like this. But what you can, in theory, do is you could have a price condition, meaning this order is only activated if like, let's say you are like 0.75 above your limit price. So meaning only if the trade is going in your favor, the stop order will be activated. So let me show you how you would have done that. So basically, let's say we'd have this like price to activate a stop order, and we'll set it to to like the limit price plus, let's say 3/4 of the way to our take profit, right? So let's say basically let's say the price of Tesla is 174.6. So what this means is if we are 3/4 of the way, which is 175.35, if we get there, then we insert a stop loss at 175.1. But before that, we don't have the stop loss activated. So I thought you could probably do that. So let me just show you guys for a second. So this would mean like I'd have price to activate stop order 175.41. The limit price was here. So basically, if you go up 75 cents, then you activate the stop order, right? And then the stop price is here. So like basically that means you activate the stop if you get here, and then you protect gains up to 175.16. Okay. So I thought this would work, but it turns out it doesn't, because you're not allowed to make you're not allowed to do stop orders with conditions for some reason. I don't know why. It's kind of weird. But maybe it has to do with the fact the stop order is a market order, but I guess not. Anyways, it's a bit weird, but I still want to show you the approach anyway. So like you'll have a price condition, and then remember you need the contract ID. So Tesla price to activate stop order. This means at 175.41, and this means is more. It's only active when you go above 175.41. Okay, which makes sense. So I thought this would work, and I wanted to try it. So then I made this order, and let me show you. So like I would basically have this like bracket trade thing to keep track of my bracket trades. So then I would have like order dot action. Basically, I want to keep track of the buy, and if it's a buy limit, or buy limit would be the limit part, and the sell take profit would be the take profit part, and the sell stop loss would be stop part. So I tried running this, and what did I get? Oh, price condition not defined. Okay. Okay, so this is the error. So you can't do it. It's only supported for limit, market, mid price, relative snap order only. So you can't do this for this. We were very close, but you can't. Okay, so let me show you. So I guess we have to resort to callbacks. So basically, first let me cancel all the orders that are active. So I do ib.open orders. Okay, so I'll do for order in ib.open orders, ib.cancel order. Sucks that it didn't work, but it gives us a little bit more work to do. So ib.open orders. Let's see if we have any. Okay, we're good. Okay, so now the idea is to do something else. The idea is like we're gonna set up some like initial dummy amount for the stop loss, like a really small amount. So like, what is Tesla's price right now? Tesla ticker that market price. Tesla is 174.96. So we'll set like a very small stop price. Like we'll do initial stop price. We'll do like something like we'll do limit price. I'll just set it to the current price to make this example easier. Limit price being the current price, and then initial stop price, it would be limit price minus 50. Tesla can go down by 50 in a day, but like usually it doesn't. Even Tesla doesn't. And then our take profit would be the same as before. We'll do like limit price plus $1. And our stop price would also be the same as before. For simplicity, let's make the stop price be limit price plus 10 cents. Okay. So you know what? Let's make it limit price plus 5 cents. Okay. So basically, this is kind of similar to saying break even, right? Because a stop loss is technically becomes a market order. So this is kind of like break even. Like once it goes below limit price plus 5 cents, you basically stop. But like you don't want this active right away. In fact, if it's active right away, it'll trigger right away. You want it only active if if the trade is going in your favor. So we'll show you how to do that with callbacks. Okay, so like to be a little for this example, let's say you're just to make it a bit simpler. Let's say you're 10%. You've made 10% progress towards the take profit. So to show you another way, so like that's why the 10% take profit minus limit times 1/10 plus limit price. So you've made 10% progress towards the take profit. So you're winning by you're winning by a certain amount. Then you want to trigger the stop loss. So let's just show you for a second. So like you'd have limit price, you'd have take profit, and you have stop price. The stop price is only active once you get to this price to activate stop order. So basically, you buy at 174.94, and your goal is to make 175.94. But if you've already made like in this case, not a lot. You've made like let's higher this a little bit. Let's say you're like an eighth of the way. Make it a little bit more meaningful. So let's say what this means is, okay, I buy at 174.97. I want to sell at 175.97. But let's say the trade goes in my favor. Let's say I get above 175.06. I don't want to give up. I don't want to turn this winning trade into loss. I want to play with house money, so to speak. So then once it gets here, then I'll put the stop loss at 175.02 to make sure like I'm still playing with house money. So that's this idea. Okay, so how are we going to do this thing? Okay, so we are going to do this callback. So I actually wrote a callback that works, and I will explain it. Okay, so this is a bit nasty of an expression. So what am I doing here? What am I doing here? Okay, so I am going to for the actual and sorry, I think I rushed a little bit through. To make the bracket order, remember, was like when you do the ib.bracket order, you get 3 orders and you iterate through them. And I said if order type is stop, that will be the order with the price condition, and then I add the price condition to the stop order. So we want to do a similar thing, except we want to place orders as normally for the other orders, but for the stop order, we want to do this complicated logic. So what is this complicated logic? Okay, this complicated logic is saying you're going to still make the stop trade as normal. You're going to do ib.place order, contract order as normal. But now what you're going to do is you're going to look at the ticker object, and you can, just to remind you, you can get the ticker object by doing ib.ticker contract. So just to show you guys for a second, it'll be like ib.ticker Tesla contract, and then you get the ticker object. So I can still do like market price. That's like, let's say you forgot like where you saved your ticker. There's no market price. What is it called? Market price would be with Java type letters. Okay, so the market price is 174.99. Okay, so you can access it like that. So from the contract, you can get the ticker object, and then you still make the trade. And then what you're gonna do is, if you made this trade, it'll be the stop trade, and I'll show you in a second. What you're gonna do is then you're gonna attach a callback to the ticker object. So there's this weird non-local keyword. Non-local is kind of like global when you have like a function within a function. So what happens here is, and I wrote everything down. I wrote some debugging. So basically what happens here is like, and you have to have this non-local thing. So basically what happens here is like, so I place the order here, and I want to attach this callback. And what is this callback saying? It's saying if the market price is greater than or equal to the price to activate stop order, meaning in this case the 175.56 here, and the parent order has been filled, meaning we did the buy part of the bracket order, then we want to update the stop price. And I just wrote notes. So how do we update the stop price? So you can get the stop price of an order by this aux price thing. So first, from the stop order, we get the order from the stop trade by doing stop trade.order, and then we change the stop price by using this .aux price equals stop price, and then stop trade equals ib.place order contract order. So this will basically update the stop price to the stop price we actually want, which is 175.02 to protect our gains. And originally we set the stop price to like basically 120 because we don't want the stop price to get in our way. So, okay, so this is only when the trade is going in our favor, and of course the parent has been filled, meaning we don't want this to run obviously without first buying the stock. This has a little bit of an issue for partial fills. So this has an issue for partial fills. So do not use this code. You should handle it in a different way. The reason I am keeping it this way, you know what? Okay, you know what? We should be careful because this does in theory have an issue for partial fills. So maybe we can also maybe do something like trade dot order parent trade dot order status dot order status dot remaining. One second. Let me just remind myself. Do I have any open orders? Nope. Okay, so like let's say I do I had this bracket trade thing. Let's say buy limit. I'll do dot order status, and then there's a thing called remaining. Okay, so maybe this would be the safer approach to do something like but make sure you double check me. Remaining equals 0. So basically you filled all the parent orders. This is when you update the stop price. And I wrote like all these callbacks. I wrote all this info for debugging. And then once you've updated the stop price one time, you can remove the callback. So basically what this big picture does is you place the stop order, and when you place the stop order, you attach a callback to the ticker. And once the stock goes in your favor, meaning the market price is above the price you want to activate the stop order, then you change the stop order, you resubmit the stop order, and then once you're done that, you can actually get rid of the callback because you only change the stop one time in this particular example. And then I added a few more callbacks within. I did on cancel order, on order cancel. So like let's say you cancel the order, then you can remove this callback. You don't really need it in this case, but this is just for cleanliness sort of. And then I did another printing thing. I said like, okay, once the stop price has basically once the price has been modified for the stop order, I want to print a stop loss has been updated, and then I want to print the order after that to see that it's been updated, and then so then I attach the cancel event callback and the modify event callback. Okay, so let's see how this works. I don't need this anymore. Okay, so these are, I kind of wrote some like debugging messages, so you'll see how it works pretty clearly in a second. So okay, so like what I'm gonna do now is do something like this. Remember we set it to 1/8. So basically this means that if you're an eighth of the way towards your take profit, then you'll activate the stop, and the stop will be 5 cents above break even. So basically this kind of means you'll be playing with house money. In real life, you don't want this at 1/8. You probably want this a lot higher, because 1/8 is like maybe 14 cents, and then you put the stop at 5 cents. So like it's too close. But anyways, so what it's doing is like, okay, first you go through all the orders in your bracket order, and if the order is a stop order, then you get the parent trade, because when you define the bracket order, so the bracket order we defined here. Let's actually redo this part here. Yeah, sorry, oops. So the bracket order. Oh, we didn't even do it here. Okay, so let's find the. Okay, so let's first define the bracket order, and I'll show you guys for a second. So I have a bracket order, and I do action equals buy, quantity I'll do 100, limit price is the limit price, take price, take profit. And then stop loss, now I'll set to initial stop loss, and initial stop price. That's like the dummy price that's like way below the current price. So let's now add these guys here. So let's see how this looks. So this means we'll have a bracket order that looks like this. So we'll have a buy order with 174.86 limit, and then you have a sell order, that's the take profit, 175.66. How is that possible? I did $1 more. What am I messing up on? I did limit price plus 1, and I did market price. So what is wrong with what I'm doing? Limit price, take profit, price. That's weird. Limit price, take profit price. Let's just see. Uh, I did +1 here, right? Oh, I called it take profit price. I need to take profit price. Okay, so now it should make sense. So now you see I have the bracket order. I have this parent order with a buy and 174.86. I have a then take profit 175.86. And then I have a stop loss that is very far away because we don't want it right away at 124 something. And remember, there's the first two have transmit equals false, and the last one has transmit equals true. What is the transmit equals false? It means kind of like wait towards submitting these orders until the last one is submitted. Okay, so anyways, that just to remind you guys of bracket orders. Okay, so just another thing is the parent order is always first. So that's why I have this logic. So the logic is like this. So the price to activate a stop order, if it goes an eighth in your favor, meaning like if it goes an eighth of $1 is 12.5 cents in your favor, then you activate the stop loss. The stop loss is 5 cents above the price you bought it at. So kind of then means you're playing with house money, so to speak. You should obviously adjust the ranges, but anyways, you don't need this price condition anymore. Sorry. So now if so now you go through the bracket trade, right? You get the parent trade from this bracket trade because remember I set it to buy and limit. That's the parent. And then you call this function we spoke about earlier. So that's the place order with ticker callback. So I call it on Tesla contract, the order, the parent trade, the price to activate the stop order, and the stop price. So let's see, moment of truth, if this works. Especially since I changed that remaining thing. So okay, so now look. Okay, so look. It started with a pending submitted. I guess because filled, but now remember. So okay, sorry. Let me show you what I'm printing. So this is the price where we want to start activating the stop. So the stop is not activating. The stop will only activate if the trade goes in our favor by getting to here, right? So the trade is still not in our favor. Let's wait. It might never go into our favor, so we'll redo this thing. But let's see if it does. Eventually it will, I hope. Anyways, wouldn't it have been so much easier if we could have just used the price condition? But anyways, I think this is much more flexible. So I'm saying I'm calling the ticker update, and I should have printed the stop price also, but you can do like ib.open orders, and you can see that we have our stop price is 124.73 now, right? So so going against us, this thing. Maybe I'll just cancel it and try again. The reason I kept it only 12.5 cents in theory apart is because I wanted to show you in the video it actually working, but I guess Tesla's so weak that it doesn't get there. Okay, let's just cancel these orders for now. For order in ib.open orders. Maybe I spoke too soon. No, it's actually getting worse. ib.cancel order. Or okay, I canceled the order. Okay, and by the way, I am guilty of doing this even today, where like I was up on a trade, but like, anyways, this is very important to have in your trading system. So let's start over. Okay, so oh sorry, let me maybe do something like this. Let me cancel the orders again. I want to show you guys the whole process. So I want to also print the stop price every time, the real stop price. So like, remember here I'm printing the calling on ticker update. And then once the market price is above the price you want to then put your stop, then you activate it. So let me also add this thing. I'll add parent trade dot ox price. That's the current stop. Okay. So let's just to give us a little bit more information. Okay. Oh, what did I do wrong? Trade has no. Oh, sorry. I need it like this. I need order. Okay. So now look. Now I filled it, right? And if it goes to my direction, what? Oh, sorry. I made another mistake. This is basically a video I didn't prepare for. So, okay. So what if we make ox price? Sorry, ox price is actually going to be order. Ox price is going to be stop trade dot order dot ox price. Okay. So now it should be better. So now see, look, this is okay. So we haven't hit our filled yet, but let's get the filled for a second. This is the current price. This 174.24. Why isn't it filled? Filled. Yay, we filled here. And now we're saying if we get to this price, we'll update our stop. Our stop is currently at 124.18. Okay, and now look, it went in our direction enough. We updated our stop, and our stop order now has a price of 174.23. So now if I do, it might have already filled because it's so close, but open orders, you see the stop is no longer 120 something, it's 174.23. Anyways, maybe we'll just wait until it fills. Oh shoot, that means Tesla went down really fast again. Typical Tesla, not a reliable stock, unfortunately. I don't know why I am always a bull. You know what? You guys get the picture. The stop was adjusted, and now we're playing with house money basically because if it goes in our if we get to our take profit, we win. If we don't, we go to 174.23. You can actually make it more sophisticated. Oh, see, it got filled. And then we can actually look at our fills. You can do util.df ib.fills. And then we can look at our fills. Anyways, our fills. Actually, you can be even more sophisticated, and you can basically create a trailing stop only when the price goes in your favor. So then, like, if the price then goes more in your favor, you keep the fraction of your gains. So maybe that's preferable for some people. Let me just show you like the execution price. What is it called? It's called execution. Execution. Apply lambda L dot price, I think it's called. So you see, like, the last thing we executed at 174.21. So basically, the stop hit. So we got kind of like we got stopped out, but like we still got stopped out above what we paid for, right? So anyways, I thought this was a practical video. It was not prepared, but hope you guys enjoyed it. And if you did, please at least like, write a comment, share. Thank you guys so much. See you guys in the next video. Thank you.